Hello, everyone. Welcome to another episode of The Sense of Things with Jeff and Ron. We are here on another wonderful week in the middle of February. Cannot believe we're already getting up to 6 weeks into the new year, and it's running by again, as every year does. So make sure that you keep up with us. This week, we're going to cover a lot of data. Ron's got some really great stuff on looking at ROI in the AI world. So I think really finding out a little bit more about what companies are doing outside of just the AI companies, but actual companies out there. Information on the presidential terms. I've got some economic data talking a little bit about some things that came out this week. We had an incredible employment number and really in a good place. So you want to listen in on that. And I'm going to cover at the end a little bit on a new tool that I've been using or following around inflation that I think is an interesting introduction for the show. So stay tuned. We'll be right back on in just a second. Hey, everybody. Welcome to the show. Ron, how are you, my friend?
Good morning. Yes, we are halfway through Q1. It is amazing.
Jesus. Every year, it just seems like it's accelerating on me.
You know what? When you're young, you don't feel it. And you always heard adults saying, boy, time is just flying by. And wow, as you get older, it truly does.
Yeah, absolutely. All right. So you want to start off with your stuff and we'll
Yeah,
go
here
from
we go.
there?
Again, we're going to keep doing this until we go through at least 1 year's worth. So this week in history, some decent ones. 1825 presidential election decided by House of
Interesting.
Representatives. No electoral majority, so the House
The House
voted for
vote.
John Quincy Adams.
Interesting.
Yeah, never
Our
happened today, but that
our
was
our first of two
there'd
father
be
and
another
son.
civil war.
Yeah, our first of two father and son
Yes,
presidents.
just two. The
Yep.
first teddy bears go on sale. President
Okay.
Theodore Roosevelt gave permission to use the nickname Teddy.
That's awesome.
I don't know if I knew that years ago. I don't know if you
Yeah.
knew that. That's where teddy bear came from.
Yep. Absolutely.
Yeah.
I
Okay.
actually I bought my wife a little talking teddy bear that looks like Teddy actually with his little hat and glasses and stuff like that. And he tells the story of the teddy bear.
Nice. 1942. This surprised me. Daylight Savings Times instituted. I thought this was in the early 20th century, in like 1910, 1915.
I
They did
honestly thought
that.
so too. Yeah.
Yeah, that surprised me. It doesn't matter in Arizona and Alaska, baby. We don't need to worry about the clocks. My issue is
Honestly,
going to
I
be
wish we
next
did the
month.
same. It's
Yeah,
the
my next
most,
issue is going to be next month when you spring forward, and then the
yeah,
market opens up 6:30 instead of 7:30 for me.
yeah, exactly. It's the most ridiculous. I don't know. It's just the most ridiculous thing to begin with. The reason for it being created, honestly, I still don't understand the reason. It was all about conserving energy during World War II and stuff like that, which I don't really understand why moving it back or forward an hour makes any damn difference.
And
But
I'm sure in parts of the country it may make sense based on the time and where the sun is. But
sure,
yeah, I know a lot of people want to do away with it. I know that more states are voting on it and the vote keeps ticking up. We'll see.
hopefully they will.
1950, a dark
Uh,
moment in our history. Joe McCarthy says there are communists in the State Department and McCarthyism begins. Roy Cohn was a part of that. He was a junior to him. And
mm,
this was basically slander, ruin people's careers, actually ruined many people's lives. Maybe there were a couple of people in there that were communists, not that it really had any major effect on our government. But
yeah,
this next to the internment camps with the Japanese are two definitely black marks on the US here during a 10-year period of time.
which to that point, if you ever want to get probably the best picture, I think, of the internment camps and what went on with that, I just finished Mark Harmon's first book about NCIS and stuff like that. And it was called In the Shadows of Pearl Harbor. And it basically is about the guy who was the prototype for the NCIS organization. He was a Japanese American
Yeah.
and just an absolutely amazingly well written story. I love it. Or it's
Yeah, and
Ghosts of Pearl Harbor.
and
But
for
yeah,
the
it is
Star Trek
phenomenal.
fans, For the Star Trek fans, they might not be aware, but George
George
Takei, who
Takagi.
played
Yeah,
Sulu, was in an
George Takei.
internment camp.
Yep. Yeah, as was Pat Morita, Karate
I
Kid.
did not know that. Okay.
Yeah.
Dr.
Yeah, I
Miyagi
mean they
Miyagi.
basically took all 120,000 Japanese either Issei or Nisei and they just interned them. So they all on the West Coast in just one swell swoop. So yeah, one of those moments we wish we could relive in history.
I hear you. All right, next. 1950, the movie Cinderella opens
Ah,
in theaters.
Cinderella.
1957, Laura Ingalls Wilder, chronicler of American frontier life, dies. Obviously, she was the author and
The House
became
on
a
the Prairie.
TV show in the early mid 70s, Little House on the Prairie. 1962, pilot Gary
Very
Powers
powerful.
exchanged in a U.S. Soviet prisoner swap. He was the one shot down in a U-2 going over Russia.
And probably one of the better movies I've ever seen Tom Hanks in, Bridge of Spies,
Yeah,
talks about this
that was
whole
pretty
thing.
good.
And
Whenever you see a movie like that, you always know it's based on something. How
yeah,
much of that was truth and how much wasn't?
yeah, part of it is anything when you have the CIA and spies involved, it's never going to be the
Right.
exact thing. But
But I thought
it
it
was
was
actually a
interesting that
really,
that
I
was the
thought, well
beginning of the
done
Berlin
movie.
Wall.
Yeah. Yeah, it was a well done movie though, I thought.
Yeah, I agree. 1964, the
Beatles.
Beatles appear on Ed Sullivan and then eventually played their first concert in Shea Stadium.
Nice.
1971, Satchel Paige nominated to
Satch.
the Baseball Hall of Fame. He didn't pitch in the majors for Cleveland until he was like 47.
Yeah,
And even at 47, he was
he was
getting a
still
lot
awesome.
of outs.
Yeah.
I would have loved to have seen him in his 20s and 30s. And there are stories about him pitching 7 days a week at
Hmm.
both ends of a doubleheader
Yeah.
in the Negro Leagues.
Yeah. No, he was an amazing
He had
player.
a rubber arm.
Yeah.
Amazing. 2002, a second gold medal awarded after finding fraud. A French judge admitted being under pressure not to give U.S. good scores. There's actually a decent documentary on this on Netflix that I saw a few years ago that
Yeah.
I remember when this happened, but this documentary goes into an immense amount of detail. And you can only imagine prior to this how often that happened. It was always a joke where when the U.S. got a bad score, oh, it must have been the East German judge. Remember that
Yeah.
whole, it was
Yeah.
a half joke. So as much as you can appreciate figure skating and gymnastics, amazing athletes, I never liked any sport where you had to be judged. Like
Yeah.
even diving, and it's amazing, but I never liked anything to be judged because things are moving so fast. How can you judge? I just never
Yeah.
understood that.
You have to in some aspects, but I don't trust a lot of these. It's like a lot of these countries collude together. And hopefully they've gotten to the point where I see it now in figure skating, watching it it's gotten a lot better because there's certain things that they just can't, you
But
know,
in figure skating, it's based on a top 6-0 score.
yeah,
So when you see judges go 5-8, 5-9, and others go 5-1, 5-2, you
yeah,
saw the same thing.
yeah. How is it that different?
Yes.
Yeah, that subjective nature is
This is like
annoying.
all the different feds around the country coming up with a GDP
Yeah.
number. You're working with
And
all the same
The
data.
Atlanta Fed is just completely in their own little world over to on the
I
right
know.
side there.
2020, the
So,
WHO officially names coronavirus COVID 19.
yay.
Yeah, I can't believe that's 6 years ago.
I know. It's amazing to me.
In some ways it feels like 10 or 15, and in other ways it feels like it was like a year ago.
It's funny because a lot of my favorite shows are on Motor Trend and stuff like that. And I've been going back and rewatching a couple series and I'm like, God, did TV suck in 2020 and 2021? It was just awful because they just always seemed off. They couldn't keep their
But coming out
momentum.
of COVID, they had
Yeah.
a lot of time to write content for a lot of stuff.
Yeah, and they still sucked.
All right, here we go. All right, so the Super Bowl was Sunday. Congratulations to Seattle.
The
The
worst Super
Super
Bowl I've
Bowl
ever watched in
flu.
my life.
Yeah, the Super Bowl flu took effect on Monday. They
Yep.
estimated 26 million workers didn't show up.
I'm sick. I'm
And there
sick.
are people there. They were talking about calls for a national holiday and whatever.
Oh, I
Yeah,
know.
look, you know how you avoid this? Don't get wasted.
Yeah, don't pound down a ton of. Now, if you're a Patriots fan, I understand why you were drinking heavily because it was the most horrible game I've ever watched. But the thing is, I didn't even watch the beginning part. I flipped it on at the third quarter, and the Seahawks had just kicked their fourth field goal, and I'm like, oh, this game
Well,
sucks.
look, if you like defense, it was a great game. The first
It,
half was
oh,
immensely uneventful.
it was brutal. Yeah.
Yeah. All right. Here we go. There's been a huge, not a tech sell-off, but a major
Mm.
sell-off with a lot of software companies.
Yep.
So this is as of the beginning of February, where these are the major software companies in the S&P 500, and this is how much they've been down from their 52-week highs. On the far left, on the far right, it basically shows the Mag 7 number only down
Mm.
1%, but
Yeah.
some big
Yeah.
names were really and significantly pulled back. If you look on the far left, I mean, you had PayPal, you had Oracle, and
Mm.
Oracle was way over its skis anyway. CoreWeave has just been over its skis also. It's a good company, but there's a tremendous amount of hype and there was a huge air pocket under their price. But if you look to the far, Meta, Amazon, Apple, Google, they had just garden variety pullbacks from where they
Mm.
were. And then
Yeah.
many of them have come
Well,
back.
yeah, and how far they've been up as it was. They've been blasting ahead. So yeah, a little bit of a pullback, but yeah, I mean, it's funny to me, especially on the software pullback. Wall Street annoys me beyond belief a lot of times because there's this belief that, oh, the AI is going to come out and it's just going to get rid of software companies. Okay, do you not think that the people that run software companies are smart enough to realize that and go, okay, we are going to use the same technology to make our company better too? But yeah, it's been ugly for a lot of companies.
Yeah, and many of them have returned. The higher quality companies definitely returned. I don't know
Yeah.
why they consider Bitcoin and Dogecoin in this, but Dogecoin
Mm.
doesn't surprise me. Everybody said that's a joke since the beginning. Now has surprised me. Think I think their CEO just stepped down.
Yeah, but once again, ServiceNow, it's all in that whole thing. And funny, I was picking up lunch yesterday. I was listening to the news, and they had a guy on there that was talking about this. That, of course, Wall Street is just throw out the baby with the bathwater, anything software. And he was saying that the retail investors are actually have been plowing into some of these software companies or baskets of software, especially like the iShares. And he's like, actually, the retail investor has actually been right on a lot of this. And what he was explaining is a lot of these big banks will put together like these baskets of stocks so that Wall Street can go and blast into it and then blast out.
Yeah.
And they're in this blast out mode right now. And the retail investor has been sliding in there and saying, hey, I'm going to buy at the bottom of here and hold on to it.
And my other thought with this was a lot of the sell-off happened in January because it
Yep.
gives them 12 months for some of the tax harvesting that they need to
You got it.
do. Instead of
Yep.
doing it in December, they let it run up. They took their
Mhm.
profits in January. Now they're getting back in because, like I said, the higher quality
Yeah.
companies here have been bought again.
Yeah, you look at some of these ones that have really been beaten up there, Salesforce, Workaday. These are companies that are productivity machines for a lot of businesses. And I can't tell you how many. I was just listening to a group we had in our conference room yesterday, and the guy was talking about, okay, you're going to put your stuff into Salesforce. It's everywhere.
Yeah.
So don't tell me that it's lost 50% of its value because, oh my God, AI is coming. They're using AI too. So yeah, it's once again, it's the BS of Wall Street sometimes that annoys the crap out of me.
All right, Bill's been there for a while. All right, here
Yeah.
we go. Keep going. So I like to talk about understanding pullbacks because people have just been too damn spoiled with the
Yep.
market over the last now almost 17 years. March 9th will be the anniversary in 2009 when we hit a bottom of
Mm.
666 on the S&P 500.
The
Now,
Mark Haynes bottom.
now if you take a look at this, right? You look how many double digit lows of each year we hit since
Yeah.
1978. What I think is amazing here is like 2013, 14, and 2019. We were only down 7%. If you look at '04, 5,
Mm.
and 6, right?
Yeah.
This was the run up to the housing crisis. 7%. I mean, that does not happen very often. But if you
Mm.
notice, when we have a handful of single digit down years at a low, we get a pretty significant pullback over the next couple of years.
And the interesting thing, like 2020 during COVID, okay, that was like a month. It went down a month, and then
Yeah,
the
that was a
rest of that
6 week
year
period
it
of time.
rocketed
It
up.
it
Yeah.
yeah, it was from now, right? This time 6 years ago to
Yep.
March 23rd. I
Yeah.
believe that was the bottom in 2020, and
Yeah.
then went back up. But yeah,
Well,
4%.
like the shutdowns here, because I remember because we had to shut down one of our co-working spaces. The shutdowns didn't even start happening until I think March. It was after spring break here. So it was like March 20th
Yeah.
was when the shutdowns happened in Austin here. It was that the market was already down. It literally was so short of a period of time. And then boom, it took off like a rocket ship that
Yeah.
year.
And last year, it was from February 19th at a high to
Yep.
April 8th.
Yeah.
That's it. That was the pullback. Okay, so based on that, looking at presidential years, we've talked about this several times about the second year, the mid-year, midterm year, about typically the worst performing year there. And then you can see if you add consistently throughout the year as we get pullbacks, as we go down, where
Mm,
are you 1 year from now?
yeah.
So if we do get a 5, a 10, we only came down what, 2.5, 3%. That's all we've
Yeah.
come down. People were panicking on that. It's insane. But God forbid we go down 5 or 10%.
Yep.
That shouldn't be a red siren. That should
Oh,
be a
that should be
green
a
light
let's yeah.
to
Yeah,
add
let's
to those quality positions.
yeah, plus you combine that with new tax policy, with decreased regulations. There's just a lot of really good things there. So if we get a pullback, it ain't going to last very long, and you better take advantage of it because it will definitely come back fast at that point.
Absolutely. Yep. So I think that these numbers are important for everybody and anybody to understand about the market, that don't be
Mm,
consumed with it. Don't be
yeah.
consumed with it. You know that historically it's a bad year. I'm not saying you could plan for it, but
Mm,
just numbers don't lie. And if
yeah.
you just take a look at this is from 1950. It's not like
Hmm.
this is a 5 or a 10 year sampling.
Yeah.
This is 75 years. All right.
Yeah.
Lastly, we talked about AI last week in productivity, and
Mm,
my little beef with you talking about it was more related to layoffs,
yeah.
related to job loss to AI. And I pushed back on that saying maybe some of it, but I don't
Mm,
think we're going to see any real significant job loss for at least 5 to 10 years because
yeah.
people still got to figure it out. They got to make sure that a lot of this stuff is battle tested before they go, yeah, we don't need 3, 5, 10% of our workforce. So I'm not going to read all these, but basically these
Mm,
are, if you take a look at these top companies, these are what they are saying AI is doing for them. And then on the right side, basically it's talking about the the productivity gains they expected an ROI going into and through 2026, which we
mm,
should absolutely see. What does this equate to in job loss? To be
yeah.
determined. We don't know. And I can't stand when I hear forecast with this because it's different in every business. Just to let you know, on the way in, I understand Cisco, which never been a big fan of their upper
Mm,
management and executives. They announced that within a year or two, and they're almost there, that 100% of their code will be written by AI.
which makes sense. Yeah, there's less error, it's faster. But you still, I think, and I hope I didn't make the point that everybody's going to get laid off because of this. The point I was making is jobs are going to change, especially in that kind of middle management, especially in the coding and all that. You still have to have, and it was funny, I was talking to a lady who owns a HR company here, and she was explaining that how AI has really changed their business because they can go and do this major data analysis. But she was saying one of her employees was just going out and putting stuff in and building like employee handbooks and stuff like that out of AI and not really checking her work. And when my friend was telling me about it, she's like, "Yeah, I went back and checked," and she's like, "Yeah, one of the things that they said, her employee said, oh yeah, you can do this. It's only available for government organizations, and this was a private organization. Had she put that into whatever she used, ChatGPT or whatever, and said, hey, this is not a governmental organization, it would have given the right answer, but it gave a generalized answer that here's all the things that could be done. And she just took it as okay, this is easy work. So I think on the coding side, yes, I think a lot of it can be written that way, but you're still going to have humans go back and check that because it could go completely off the rails in another direction
I agree.
if you don't watch it. Let me cover my stuff here real quick. We had some really good news this week. I think the best news was the employment situation report came out, I think yesterday. And for the first time in a while, we had what I would consider a legitimate number because it wasn't a whole bunch of governmental employment. It was actually private payrolls. So overall, we were up 130,000 non-farm payrolls for the month. I love the consensus range here by the Economist. Between 0 and 130,000 was their estimate. Yeah, so we're just going to cover it as far out as we possibly can. The consensus was 70 grand. We came in almost double that at 130. Employment rate dropped a little bit or unemployment rate dropped to 4.3, which is on the bottom end of the consensus. Private payrolls, this was the good part. Government payrolls were down 52,000 or 42,000 or 48,000, excuse me. Private payrolls were up 172. So that's the first time really in almost a year that we've actually seen even above six figures on private payroll. So hopefully that's a trend that we see moving. Hopefully it's not some kind of weird anomaly because of January. But a lot of good news there. Average hourly earnings up 0.4%, which in the past, I think the market would have said, okay, that's bad. But I think you're getting, even though you're paying a little bit more, I think you're getting more productivity. And that's really where AI, I think, is improving productivity. So I don't really worry about average hourly earnings that much. Hours are about on track and everything else. So I think really good news. I'd like to see 2 to 3 months of this in a row. And of course, if you remember the year before, I think I can't even remember what the number is, like 1.8 million jobs that they went back the previous year and went, we were wrong. In true BLS fashion, they went back and revised the numbers down 800,000 for last year because whoops, we just screwed up at that point.
Yeah.
You suck at your job, guys. All right. So jobless claims were up a little bit down from the previous week, down from the consensus or up from the consensus. I think we're just flying into that 230 range right now, and I think we're going to stay there for a while. I think there's just a lot of movement around. Hopefully, the job situation is picking up. Yeah, you've got jobless claims, but I think it's a big switcheroo that you're seeing going on right now. And I think some of this still is carryover from government numbers. What's your thoughts?
I got to tell you, the jobless claims versus the unemployment number, I've always had a problem with because it's on a weekly basis and they've had a lot of issues over the years with situations as far as, oh, we didn't get the data in. And I don't know if that was political or not, but remember how we talk about revisions, right?
Yep.
With unemployment, there are more revisions to the weekly jobless claims and more often and more skewed than ever before. But the problem is that the reaction is the day of when it comes
Yeah.
out, not the revisions. So with the jobless claims, you could take it for what it is. I don't put a lot of stock in the weekly jobless claims.
I don't either. I think it gives us a little bit of a range of what's going on out there. I think the economy can absorb 220,000. I think the ongoing number, I forget what it is, like 1.8 million or something like that. That's really the number I follow, is that the long term, the continuing claims, because that'll tell us what direction things are going at that point more than the weekly numbers. And you see the same thing in home sales and everything else. 1 week can skew the numbers or whatever. At least I think we're going to stay. It seems to me, and if you look back 6 months, we're hanging out in this 230 range, between 210 and 230, which I think the economy can absorb that pretty well. And it sounds like at least the new hiring might be able to absorb some of
Well, if
this.
you saw in the prior slide, you had 170,000 non-farm payroll.
Yeah.
Meanwhile, there's 227 doing jobless claims.
Yeah.
It's still a net negative.
Yeah. Absolutely. Like I said, and I think a lot of this 50,000 basic government jobs, and that's been going since mid last year. We've been shedding government jobs, so that's got to get absorbed somewhere. Or I think a lot of those folks got a really nice packages to leave government when they left, so they may now just be filing for unemployment in a lot of those cases for people that left 6, 8 months ago.
Interesting. Okay.
Retail sales, of course, they were just a big, ginormous smoking pile of what? Just straight up zero, where consensus was zero point 0.4. I don't know how much I read into this. It was a government shutdown figure, which I'm not sure that they were able to gather the data quick enough. I don't know, and I'm not really putting any credence into it. And
Well, I'm going to
honestly, the
tell you why you
market,
should put no credence into it, because they said that the holiday season was pretty good.
yeah, yeah, and you're coming in and saying, no, it was terrible. I don't buy this. And this was December 2025. So yeah, like I said, I just don't put a lot of credence into the way that they gather data in a lot of those cases. Last thing, employment cost index, another government shutdown number in line with everything, actually a little bit less, which is interesting that you saw wages up, but employment cost is down slightly. Once again, it's not enough of a number for me to go, it's one way or another, but it's just something to kind of keep an eye out for.
Yeah.
So the last thing I want to cover today is TruFlation. So this was something I was introduced to probably, I guess, about a month or two ago. I just happened to have somebody that I watched on a lot of the news channels
Jeff, just make it a
that,
little bigger.
yeah, how's that?
Good.
Okay. So TruFlation is a site, truflation.com, and basically what they decided to do was change up how they are looking at CPI versus how the BLS is looking at CPI. So what they decided to do is use a lot of data sources that I would consider are more modern. The BLS, the way they report inflation is unbelievably archaic. They've literally been doing it the exact same way for the last 75 years. And I just think it's behind the times. So what TruFlation actually did is they looked at it from the perspective of different data providers. So they use things like Zillow, AAA, Kantar, Nielsen, Amazon, and Surify to gather really what I would consider current data. And one of the things and Ron and I were talking about this before the show. Right now, BLS is reporting 2.70%, which even TruFlation up until the beginning of December was reporting along with where BLS was. And we have seen a massive drop off. So I started looking at this stuff right around here at the beginning of December, and it was 2.29%. The TruFlation number right now has gone down to 0.78 or 0.74. So that tells me that what is coming is that if this is true, now, once again, it's somebody else's way of calculating it. If it is true, we're starting to see a deceleration in a lot of areas. And when I started digging into the composition of it a little bit, I think one of the big ones, and this we've really seen come off a lot of the Fed governors that I've listened to have talked about this, that the way they calculate current CPI is based on housing numbers, rent numbers from 2 years ago, which makes no freaking sense to me at all how they calculate this. And those numbers have been going down, and they have drastically changed here recently from a lot of what I've heard from the Fed governors that will talk about this. So that has an effect, I think is going to have an effect on the CPI numbers once they get caught up. Food and bev has come off the charts down. We were talking about this. Ron said he didn't see much of a change. I can say I have. So I don't know if it's regional and maybe that's what the deal is. Alcohol and tobacco has hung in there. Clothing and footwear has come off the charts down. I think education has stayed about where it was at. So I think the big things that we're going to see are housing, transportation, where it's been, utilities went up drastically and have come down a little bit here. So it's interesting to see if what we're seeing in the TruFlation number is going to be what we start to see in the BLS numbers once they get caught up with where we're at currently. Thoughts?
You know how I feel about this. I've never
Yep.
been 100% behind the CPI number, but a lot of the numbers that you're showing me don't make sense to me either because
Mm,
I have clients all over the United States. I know what it's like here in Phoenix and Arizona. Yeah, I've seen things specifically food and beverage go up, not down.
mm,
I know housing may be a little bit closer to what you showed there because
mm.
I know home prices have come down because there's not enough buyers because of where the mortgage rates are. But
Yeah.
I don't know how inflate. They're trying to show a TruFlation number of under 1%. Actually, you had showed a number there. I can't remember what it was. Go down to the bottom. Is it communication? You showed like a negative number. Go up to clothing and footwear.
Yeah. That's showing negative.
That's showing that it's coming down. Go to alcohol
Mm.
and tobacco.
Yeah. That's been just
That's
humming
held.
along at 3%.
That's held. I'm looking at this and I'm just saying
Yeah.
I don't
Health
I
is
don't
far
see it where
above.
I am and I'm not hearing it. So I
Yeah.
understand that the sources that you had mentioned earlier were a little bit more broad-based, widespread. I get
Mm.
it. But then again, and I don't consider ourselves the average person, but even the average person really doesn't know the actual calculation here.
No, no, I don't think they do. And like I said, as I've spent more time learning about how BLS calculates a lot of this stuff and how they gather the data, it is so insanely antiquated how they do it. And I understand there's no, honestly, there is no, I guess, reason if you work in the government to look at more efficient ways of doing things. You get paid the same if you do it good or if you do it inefficiently.
It's a civil service
Um,
position.
yeah, I mean, it's civil service. They're going to do it. They just keep chugging along the same way they've always done it. And there's no incentive for them to make a big change and to spend time. And I think that the funny thing is hearing everybody talk about Kevin Warsh that, oh, as soon as he comes in, he's going to drop interest rates and all that. First off, he's only one person in a whole group of people. So he only has one vote regardless. He can influence. The thing that I would say from hearing him and listening to him for years, I have listened to him out there in the media and stuff like that for years. The only thing I will say is I think what he will do is come in and actually modernize the way we collect data, and hopefully we can get a more accurate, up to date look at where this is instead of looking back 3 years and trying to predict the future, which I think is just
Yeah, but the
absolutely
Fed doesn't
annoying.
collect data. They take the data from different sources
Mm,
and aggregate it. They got
yeah,
250 PhDs that are doing it, and they can never agree on a damn thing.
yeah, yeah. No, I think they all think the same, which is you need a little dissension in the house to say maybe this is the wrong way. But once again, the just because you have a PhD doesn't mean you're the smartest guy in the room. It means that you've gone through the schooling. And if you all think the exact same way, you went to the same schools, maybe you get the same answers because everybody's thinking the same way. So I'm hoping that at least the Fed chairman can come in and shake things up a little bit and say, okay, let's think about if we're gathering this data from all these different data sources, how do we improve those data sources to give us a better and more accurate answer?
I agree. I agree.
Cool. Well, folks, thank you for joining us as always. Hopefully, this is helpful to you. Make sure that you subscribe to the channel. Make sure that you give us a comment. Love to hear from you. And we will talk to you guys when we get here next week.